Hello, friends. It's Sunday, November 19th. We're going into Thanksgiving week and the holiday season. And so this is a great time to review where we've been throughout 2023 and what the market is going to do throughout the remaining year. Now, the end of the year is typically what's called window dressing season. And the reason it's called window dressing season is that it's the time of year where brokerage houses realign their portfolios, get rid of their losers, load up on stocks that are perceived as winners to illustrate to their clients and prospective clients that they're into the latest, greatest, hottest stocks, the best moving stocks. Window dressing. Nevertheless, we have to look at where we've been and where we're going. So let's start out looking at the economic calendar for the week beginning November 20th. Now, Monday, November 20th, there is going to be no news that is going to move the market. However, on Tuesday, the minutes of the Fed's October 31st, November 1st FOMC meeting is going to be announced. And the market really doesn't expect any real surprises or any real news or changes regarding the Fed's position in terms of halting their interest rate increases. And the proof of that is, let me go over to the CME FedWatch tool. The target rate probabilities for the December 13th FOMC meeting is that the Fed is going to hold interest rates steady with a likelihood of 100%. 100%. So the market really doesn't expect any changes or surprises from the Federal Reserve. Okay, so we can put that aside. Let's go into what's happening throughout the rest of the year that could put a damper on the stock market. Now, we have two wars going on. We have a war in Europe, we have a war in the Middle East, okay? Enough to rattle nerves internationally on anyone's calendar, okay? But nevertheless, let's see what the stock market has done. From at October 30th, the low of 41.18, we've gone up to 45.18. So a 400-point rise from the end of October through the middle of November, I should say. Again, today is November 19th when I'm making this video, but let's look at the big picture. These are one-day candles of the S&P. And starting in the end of October, the market moved very, very sharply upwards based on some very good economic reports, very good inflation reports, very good job reports. And so the market has left a number of gaps that are unfilled. Will they be filled before the end of the year? It's a good question, and gaps always fill, but it's likely that the market is going to continue upward. First of all, and this is just don't bet the ranch on what I'm going to tell you, but as I said, this is window dressing season, and window dressing season, brokerage houses switch their portfolios to the biggest, greatest, best. Also, holiday season, traders are in a jovial mood. They're in a happy mood. Nobody wants disappointment in holiday season, right? So the market is likely to continue upward. Now remember, despite the two wars going on, look what has happened through the end of October rather, to the middle of November. Market has done very well, 45.18 to 41.18 or thereabouts. Okay, 400 points, not too shabby in about 3 weeks. And so even though the market has gone up through leaps and bounds and left a number of gaps, look at the metrics over here. The market, and I have my candle right over here, my cursor right over here at Wednesday, November 15th, okay? The high on Wednesday, November 15th was 45.21, and the previous high is right here at September 1st. That high was 45.41. So we're 20 points away from the September 1st high. 21 points away. Now, as we can see over the last 3 days of trading, the market has struggled to make any kind of real gains, okay? So what we're going to watch for is, can the market take out this high at 45.41 that was made on September 1st? That is a big question, because if it does, we're likely to test the high of the year, which was put in on July 27th, and that number was 46.07. Is it possible before the end of the year? Yes, it is. And what would make the market go down? So let's ruminate, let's noodle around the question of what could make the market go down. Now, in spite of the fact that there are two wars going on, inflation has been a problem, but it is cooling off. The market has made 400 points in gains over the previous several weeks. Very dramatic gains. Now, we can also see, and I have my stochastics at the bottom, stochastics is greatly overbought, but stochastics should not be the end-all and be-all of our decisions on where the market is going to go. So now let's look at the daily chart. Okay, here is my 3-minute chart of the S&P E-mini for Friday, November 17th. And the market has been trading in a narrower than forecast range. Forecast, of course, using Taylor's trading technique calculations. The calculations show that resistance was at 45.43 and support down at 45.17. That's a 26-point range. However, the market only made about half of that. So the market, as I said, as you saw on the big picture, the market has been struggling to make greater gains. Nevertheless, where is the market going to go on Monday? Now, here's the forecast for Monday. I'm going to take you over to my chart for Monday. My forecast for Monday is based again on Taylor, 45.16 at support, 45.39 for resistance. We have to see where the market opens and where it goes on Monday. And again, taking out the September 1st high at 45.41 is well within the reach, because look, the resistance is forecast at 45.39, and of course these numbers are calculated numbers, so 45.41 is right around here. And if it takes out this number, or if it closes higher, I think we can look for the market to make increasing gains throughout the week of Thanksgiving. So, talking about the week of Thanksgiving, here is my Taylor calculator. And for those of you who have the calculator, what we do is to add rows, we select the date column and we drag down, and then from the option box, we select fill weekdays. We don't want to have any weekends where the market doesn't trade. Then, since Thanksgiving is a holiday, November 23rd, we select that row and we delete it. That's because we don't want to have any blank rows in our calculator. So that's my video for today, Sunday, November 19th. Marv Eisen from Timeless Dollar Trading Academy. Trade safely, use lots of patience, and I'll see you in my next video.